This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Welcome to Bloomberg Businessweek Daily. Carol Massar along with Tim Stenivek. He is back. We missed you on Friday.
I missed you guys. I was trying to find some nice air.
And?
Didn't find it.
And you went upstate a little bit,
Yeah,
right?
Western New York.
Yeah.
It was actually,
More across?
Yeah, it was really worse than here.
And it was worse.
Yeah.
Because it did start to feel like things getting better.
Yeah,
and you could see the sun, you could see some skies.
We should note, even though things are better here in New York City, they're not better around the country, and certainly not in Canada. So keeping an eye on everything happening as a result of those fires.
And it's something we're going to keep a watch on throughout the week, because it certainly isn't going away. If you look up, you pull up a fire map across the country, that to me makes me a little unsettled.
Well, it's a good segue. We weren't even planning on doing this, but just a preview to what we're going to be talking about at about 3:40 on Bloomberg Businessweek Daily. Alistair Marsh is going to be joining us, and we're going to talk a little bit about the sort of climate black swans that banks are starting to risk out as a result of climate change and what could happen.
Isn't this what ESG was supposed to be about? Environmental, social governance factors that financially could impact things. I know it feels no heart because it's a financial impact, but it's the reality, right? Things are different in a world that is getting warmer, and these climate change events are more extreme and more often, right?
Yeah, I'm not arguing with that.
All right. Happy Monday, everybody. All right. Coming up this hour, first of all, something you pointed out, interesting. It's on the Bloomberg. Bearish bets across U.S. stocks are surging to a record in the face of market gains, reflecting anxiety about the staying power of a rally. So this is something we're thinking about all day today, but really throughout the week, too, as we start to get earnings and some other things. We'll see where stocks go. Also ahead this hour, wait a minute, or so says a federal judge who temporarily pauses the deal between Paramount, Skydance, and Warner Brothers Discovery. Our Chris Palmeri, lucky for us, on the East Coast, so he's going to be in studio. Yeah,
Warner Brothers Discovery shares down about 4% as we speak. Plus, maybe a new 10-day peace deal is coming. We'll see.
Maybe.
Yeah, the latest on the U.S.-Iran war that's nearing a 5-month mark. And what might be the most impactful in the 1,000 days of war and upheaval that reshaped the Middle East?
It's a bigger deal, right? And we know that. Hey, also, we're going to get into why the U.S. dollar smile now looks like a smirk. We're going to do that. And then it feels like we've seen this movie before. We're going to tell you about the alchemists tapping insurers to unfreeze private markets. Yes. Transparency, regulatory oversight, all these things feel familiar.
Also feeling familiar, Charlie Pallett. He's standing by in the Bloomberg Businessweek studio with an update on today's trade. Hey, Charlie.
Well, hello there, Tim. Welcome back, and good afternoon, Carol. Here's what's going on. Got to begin with the big story right now. We're talking about Paramount, Skydance, Warner Brothers Discovery. If you're just joining us, let's recap and reset, because a federal judge in Oakland has temporarily paused Paramount's $110 billion takeover of Warner Brothers Discovery. The judge ordered the companies to hold off on consummating the deal for 14 days. Paramount and Warner Brothers had hoped to close as soon as July 22nd. As Carol mentioned, our Chris Palmeri is in New York. You'll have more on this story coming up in just a moment. Shares of both companies right now. We do have Paramount Skydance actually turning around from earlier losses. Paramount Skydance now higher by just about 0.1%. Warner Brothers Discovery, though, moving lower by 4%. We've got the Dow in the red right now, down 140, drop there of 0.2%. S&P 500 index higher, which means that the stocks have halted back-to-back losses. We've got chip makers bouncing. That perhaps the big market story today. NASDAQ up 0.5%. NASDAQ 100 index up 0.7%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 1.8%. Spot gold down $10 the ounce to 4,006, right around that 4,000 number. Right now, gold is down 0.3%. West Texas Intermediate crude 82.86 a barrel, up by 0.4%. The 10-year, by the way, 4.59%. Chip stocks surging. The SOX, as I mentioned, up 1.7%. Nvidia up 0.9%. Broadcom up by just about 3% right now, and shares of Micron up by 4.4%. Carol and Tim, lots going on. We got you covered. That is a Bloomberg Business Flash.
You always do. All right, Charlie, thank you. We'll be back to Charlie later on this hour. Well, certainly top of mind today. A federal judge temporarily paused Paramount Skydance's $110 billion takeover of Warner Brothers Discovery. The judge in Oakland, California, ordering the companies to hold off on consummating the deal for 14 days. Paramount-Warner Brothers hope to close, though, Tim, as soon as July 22nd.
Yeah, shares dipped initially. Warner Brothers Discovery shares are still lower, down 3.8%. Paramount Skydance shares, they were down earlier in the session as much as 2%, but down now.
A little bit higher.
A little bit higher now.
Just a tad.
Yeah.
All right, so let's get to it. What do we need to know? Why is this happening now? That's what makes me wonder. Bloomberg News senior editor and entertainment team leader Chris Palmeri, usually on the West Coast, in the heart of Hollywood, out there in LA, joining us here, as we said, in New York City. What do we know about this, and why is this happening now?
Well, just to put a little context here, they were very close to closing this. The Justice Department approved the merger. EU is expected to announce something on Wednesday. They're going to have a deal and green light it. So Paramount was hoping they could actually close this week. And so the attorneys general, who've been sort of threatening action, finally did sue. And so now this is a potential problem because anything past September that Paramount doesn't close, they have to pay Warner Brothers shareholders millions of dollars a day until they get it done, if they get it done.
What's the whole? If they get it done, are we really saying that?
Well, I think the market's reaction indicates that something will happen, that some sort of agreement will be reached. I think that might be a face-saving move for the attorneys general, certainly for Paramount as well.
What's the sticking point here?
Well, there's a lot of people, particularly in Hollywood, who really object to this. I mean, we're combining two, legendary movie studios, two giant operators of cable TV channels, two news divisions, CBS and CNN, two giant streaming services. So this is if this isn't antitrust, I mean, what is, right? I mean, this is a major consolidation. Now you get into the question of how much market share do they have? And this is one of the things that I think people were a little surprised that the suit wasn't stronger. They really decided to focus on the movie business, and they couldn't even get a 30% market share for the combined studios. So I think there was a feeling that the case was not as strong as it might have been, and this is kind of like almost a relief for investors. Yeah.
So could any chance Netflix come in at this point, Chris? And would this be a deal that would more likely pass regulatory muster?
Well, we can go on and on about Netflix right now. They're sort of in a lot of trouble. I mean, their stock really began to head south last year when they initially were interested in Warner Brothers, and they haven't really overcome this idea that what were they thinking, So I can't see them coming back at this point. Yeah.
So this deal does get done. I mean, we know they want to do it as soon as July 22nd. Is that likely to happen, or is it just maybe?
Definitely not July 22nd. So I think the next is a hearing to determine whether the injunction that's just a temporary one now goes at least through the end of trial. Now, remember, the attorneys general are asking for a trial date next year. So that's potential trouble for Paramount, and they're gonna fight every step of this the way. They're gonna fight the injunction. They're gonna fight. I think they're Macon Delverham, their chief legal officer, suggested could go to the Supreme Court.
But I mean, if it goes to the Supreme Court, is there? I don't know. It's hard to say with this Supreme Court, but is there sort of precedent for something like this? I mean, it's a challenge to actually answer that, given that we're in a different era than we've ever seen with media right now. And if you were describing this 10 years ago, I think there would be huge issues. But it's not like that anymore.
And by the way, Macon Delverham, who is the antitrust chief in the first Trump administration, who argued that AT&T should not be able to buy Time Warner, and he lost that case. Of course, now he's in favor of Warner Brothers consolidation. But I think most to your point, the Trump administration is seen as pretty pro-merger.
Yeah.
In fact, we heard the FCC commissioner on our program here recently saying that. He was talking about all the deals he's greenlit. He's got some final say in the Warner Brothers deal as well. But this is. Yeah.
And he was at the UFC fight on the White House lawn.
I know.
Yeah.
Exactly.
We could go on and on about all the relationships with Paramount and the Trump administration for sure.
So saving face may be what it's all about, like you said too. All right, Chris Palmeri, thank you so much. So excited to have you here. Bloomberg News Media and Entertainment Team Lead Chris Palmeri joining us here in our Bloomberg studio. Hey, a developing story, so we'll continue to watch this one in terms of Paramount Skydance and what happens next. But so too developing and ongoing, if you will, between the U.S. and Iran, of course, is their war. We see oil prices swinging between gains and losses, traders reacting to a worsening of the Middle East conflict and attempts to bring about a pause in the war. Let's get to it, and let's go to our Bloomberg News DC Bureau and to Bloomberg Economics Statecraft lead. He is Chris Kennedy. Chris, feels like since this war began, and certainly when it went on longer than shorter, we've had reports about President Trump being bored over this war, that he couldn't care if peace negotiations collapse. Where is the president and his team on dealing with this situation? Where is it? High up on the priority scale? Like, give us, what are you guys hearing?
Well, it's hard to know what the president is thinking about on a day-to-day basis, but where we are right now, 9 straight days of U.S. strikes on Iran, Iran increasing the pace of retaliation on its neighbors, but also on Jordan. I think the longer this goes on, the bigger a priority it will be for the White House. So far, I would say the response in global oil markets has been relatively modest. But the buffers that we saw, kick in over the past few months are wearing thin. That includes U.S. strategic reserves. It includes, China's pause on buying. We don't know how long that will last. And we're seeing additional pressure on global oil markets from Ukraine's continued campaign against Russian energy infrastructure assets. So if it's not a super high priority at the moment, I think it will become one as long as this continues.
Chris, about an hour and a half ago, the president out on Truth Social saying every time Iran kills an American soldier, they will pay for that killing many times over. The directive has been passed on to Secretary of War, Pete Hegseth. It continues to go on. We've seen this president make threats, many threats in the past that haven't necessarily been followed through on. And I'm just wondering about the weight of his words right now in this conflict and what they mean, not just to Iran, but to the world.
Well, certainly it doesn't bode well for the idea that we could be, on the brink of another ceasefire. 10 days is what's being discussed in the media. Iran and the U.S., so long as they're actively fighting each other, there's going to be, no way that we're going to get to something resembling what we saw during that brief period where the MOU was in place. And we've seen that Iran has not responded well to these sorts of threats over time. So, we've seen a few different incidents that unfortunately led to the deaths of service members. I think there was an unexploded ordinance that was trying to be dealt with, and then there were some more deaths that were the result of direct attacks. So we'll have to see how the president responds and how Iran responds over the next few days.
Who are the lead negotiators, Chris? I mean, I did see the Secretary of State there at the final, the World Cup final, along with the president.
I just lost audio.
Oh, okay. Chris, you can't hear us? Nope. Okay. So obviously talking with our Chris Kennedy, Bloomberg Economics Statecraft lead, talking about certainly the war. We mentioned some of the headlines. We mentioned that oil prices have been moving around because there are, some questions about whether or not we're seeing a worsening of the Middle East conflict and attempts to bring about a pause in the war. Yemen's Iran-backed Houthi rebel group said it would impose a ban on maritime traffic from Saudi Arabia, a potential threat to the Red Sea shipping route. Chris is back with us, Chris Kennedy, Bloomberg Economics Statecraft lead. He's in our DC bureau. Stuff happens. It's a Monday. So, Chris, who's leading the negotiations, for the United States at this point? I think of that, the president and certainly the Secretary of State there at the World Cup final. But I'm just curious, who's leading the cause here and who's leading what happens perhaps next in terms of the U.S. response?
That's a great question. At this point, I think we're waiting to see what materializes from this supposed plan being proffered by Qatar, and Pakistan is in the mix, and I think they'll get to the point where you might actually see some additional involvement from perhaps it's going to be Secretary of State Rubio, perhaps the Vice President, or Witkoff and some of the other actors that have been engaged throughout the process. But at this point, I think we can safely say that there are no active negotiations, and the next few days will tell how much movement there is on these most recent proposals that we're hearing news of.
And yet, as Carol mentioned, no clear direction for oil prices. It does seem like the equity market is kind of shrugging this off. I know we're talking about a global conflict here, but we're Bloomberg. We talk about markets too, and we look to markets for the way that people are thinking about conflicts. It seems like the market's kind of shrugging this off.
There's been so much back and forth on this, and I think commodity traders are hesitant to make big bets one way or the other while things are so uncertain. I can say that Bloomberg Economics, we've been looking at what we expect now for inflation in the global economy, and this most recent flare-up has lasted long enough that we do see higher inflation most likely by the end of the year. And if things devolve, we could actually breach 5%. And then in terms of the real economy, we already are seeing the impact. Diesel prices are above $5.10 a gallon now in the U.S. Gasoline prices just breached $4 a gallon for the first time in since peak war. And so the reality is that consumers are being hit.
Yeah, that's for sure. All right, Chris, thanks so much. Just getting us up to speed in terms of what we're hearing, certainly from the White House and from the government when it comes to the war. Chris Kennedy, Bloomberg Economics Statecraft Lead, joining us from our D.C. Bureau. All right, the war, the AI spend, the impact of it all, the Fed, Chair Kevin Warsh, there's a lot coming at us. All these things and more are what investors are keeping an eye on. And I got to say, when we were thinking about this segment with our next guest, there was something we wanted to kind of layer on top of that, and that has to do with AI and its impact, Tim, on the economy.
Yeah, it stayed with us. It's something that Dr. Doom, as he's called, also known as Nouriel Roubini, told Tom Keene and Scarlett Fu on Bloomberg Money on Friday.
Okay, unfortunately, no audio.
The Gremlins are here on this Monday with the audio.
Listen, I'm exhausted this Monday, so I am like feeling it too. Here's what Nouriel Roubini had to say, though, and said this to Tom Keene and Scarlett Fu on Bloomberg Money. The problem is going to be that with AI, eventually we're going to have a long-term permanent tech. Unemployment is going to happen only slowly. But is it going to happen in the next 20 years? So even if you increase the retirement age, the problem is going to be a large chunk of the population is going to be replaced by AI and robots in the next 25 years.
He continued to say, so increasing retirement age is not going to be a solution. It's true that with higher potential growth, that ratio tends to fall because it's debt to GDP. So our fiscal condition is not as bad as it would be in a situation where growth is lower, but that at some point we have to do something. Eventually, we need some form of universal basic income for everybody while they work. And once they retire, we're already on the way to that.
We will need some form of universal basic income for everybody. And this reminds me of a conversation we had with a real estate developer who was talking about housing in the future and saying some of the development that they were thinking about is with keeping in mind that at some point people are going to be living on universal basic income. And it just kind of struck us. I think it was in the context of AI and all of that. That, of course, was Nouriel Roubini with the Bloomberg Money team, Tom Keene and Scarlett Fu on Friday. I'm curious to see what our next guest has to say about all of what is going on and what it means also for the U.S. dollar, always closely watched in terms of the health of the U.S. economy and markets. Back with us is Jayati Bharadwaj. She is head of FX strategy over at TD Securities, joining us here in studio. It's a lot. What is most important here? And AI being transformative, geopolitics being transformative, maybe already is. Do you agree with all of that?
I think you're absolutely right. There's a lot being thrown at us in terms of markets, and in trying to think of how should markets price all of that, to me, it's all about the sequencing. I think getting the sequencing right is very imperative in understanding how markets will trade it. Like, let's start with AI, for example. In AI, unfortunately, you will be only in a realization trade in the near term, where unfortunately you will not know how much it boosts productivity. You don't know. Currently, it's inflationary right now. Even theoretically, so many economists, including Fetcher, Warsh, will tell you ultimately AI is disinflationary. But clearly, in the near term, it's inflationary first because of all of the CapEx investment move, all of the spending going in that direction. What I mean in terms of a realization trade is that clearly there is a global race for AI. You will see models, make old models seem, deem more expensive, not being able to match in terms of computational power.
In terms of China, we talked a lot about last week.
And this morning as well.
Yeah.
So in this realization trade, there will be a lot of winners and losers. There will be a lot more volatility across the world in terms of equity rotation. And at the same time, you are seeing front-end rates volatility because of the complications of US and Iran. And now, what is the Fed signaling? Is the Fed signaling that interest rate curve path in the US should be higher because of AI, or is the Fed signaling that we will react more bluntly to inflation?
On the inflation front, we just had an interesting conversation with Chris Kennedy, our Bloomberg Economic Statecraft lead, and he made the point that the Bloomberg Economics team says that if this conflict continues to go on, we could see inflation at 5% at the end of the year. And he referenced diesel prices be above $5 a gallon. I saw it all on the highway yesterday when I was on the road for 8 hours, $5 and above for diesel everywhere I went in New York State. Do you think that's possible to see inflation above 5% at the end of this year?
Potentially, but that would require a material escalation in the geopolitical front. And for what you were just talking with the previous guest, markets to trade it as a serious escalation. Because markets are currently trading this as this is escalate to de-escalate because this is a midterm election year. I don't think people are buying into the fact that any of this escalation is actually really aggressive, given that the war is extremely unpopular in the US in a midterm election year where Trump's approval ratings have already taken a hit. Nobody's buying into the argument that this is real escalation. So you would need to...
And yet it continues to drag on and on.
The helpful factors have been that the US has been exporting a lot more and that China has curtailed its demand, has been dipping into its reserves, which is allowing both sides to continue into this negotiation. I think Iran knows that its leverage is maximum just up until the time before midterm elections, which is where Trump will care about this the most, and they're utilizing it, and so is the US trying to push them back on it.
Your notes, you write that the US dollar smile now looks more like a smirk. What does that mean? What do you mean?
I wish it was as healthy as your smile, but the dollar smile is a very talked about concept in FX where they say that the dollar rallies on the ends of the smile, where either the US growth is exceptionally strong compared to the rest of the world, or on the other tail scenario where the US growth and global growth look increasingly look deteriorating. So it's that smile that we try to measure. So given the US economy is resilient, growth has been going up well, the Fed is expected to start hiking interest rates soon, but the dollar is, strengthening, but really struggling to rally here. Any dollar move higher meets with a clear ceiling here because the dollar now needs a lot more boost and a lot more significant outperformance compared to the rest of the world for the dollar to keep rallying. I have this one interesting chart I flagged to clients where you can see that in AI inflows into US equity markets in the last couple of months have skyrocketed. Equity inflows into the US is a straight line up. Historically, that used to be a good predictor of the US dollar, but that's a straight line up. The dollar is like a small bump higher. And there's a clear dissonance and there's a break in traditional correlations here.
So does the dollar catch up at some point?
It depends upon if the world can fall back in love with the dollar being the safe haven or not. That has been the biggest driver of FX markets since the current administration took place, which has been the hedged dollar trade, where the global investors are still buying equities, still buying US treasuries, but none of them are wanting to hold the dollar exposure associated with those assets, and nowhere close to how they used to do that pre-end of 2024.
Maybe this is really stupid, but they're dollar-based assets, right? So shouldn't the dollar be equally going up? That's
absolutely true.
It's kind of a clear, easy correlation.
So when foreign investors buy US assets, they have the option of hedging their currency exposure or not. And as hedge ratios went up on the US dollar, buying US equities no longer translates into a one-on-one demand for the US dollar. Because while you're buying US assets, you're hedging all of that exposure, so you're no longer long the US dollar. And that was a big move that we saw all of last year, that massive move lower in the dollar and higher in euro. That was the birth of the hedged dollar trade. So I think that's a very important question for markets to see if you can go back to, the pre-Trump distortions, or do markets have this fragile relationship with the dollar or not?
Interesting stuff against everything else that's going back. Great start to the Monday. Thank you so much. Jayati Bharadwaj. She is head of FX strategy over at TD Securities. Coming up, we're going to get into a little bit more on the U.S.-Iran war, but really the 1,000 days of war and upheaval that have reshaped the Middle East. We're going to get to that in just a moment. First up, though, let's get back to the market trade and to Charlie Pellet.
All right, thank you very much indeed. Let's recap and repeat our top story. Federal judge in Oakland has temporarily paused Paramount Skydance's $110 billion takeover of Warner Brothers Discovery. Right now, we've got Paramount down 0.2%, Warner Brothers Discovery lower now by 3%. Chip stocks are rallying. The S&P 500 index higher by 14, up 0.2%. The Dow in the red by 0.3%. The Nasdaq 100 index up 0.7%, with the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 1.7%. 10-year 4.59%. Gold down $11 the ounce, holding right around 4,005 now, down 0.3%. An advance for crude. West Texas Intermediate has been swinging between gains and losses. 83.06 a barrel right now, up 0.7. Brent crude up by 1.3%. Oil stocks are advancing. We've got ExxonMobil shares pushing higher by just about 1% right now. Chevron up 1.4%. ConocoPhillips shares, they are gaining now by 1.2%. I mentioned the chip names. The SOX up 1.6%. NVIDIA now up 0.8%. Broadcom higher by 2.7%. Micron is rallying 3.5%. Intel up by 3.5%. Carol and Tim, that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this war in the Middle East, we've talked about it at the top of the hour, involving the U.S. and Iran, of course, but also many others in the region. You know that. But it didn't necessarily, well, the U.S. and Iran, it did begin on February 28th, but it's kind of just the latest chapter, so our team writes, in more than 2 years of conflict unleashed in the wake of Hamas's assault on Israel that laid bare how the Middle East that existed before the attack on October 7th, 2023 was long gone.
As Carol mentioned, so notes a recent Bloomberg Big Take that we wanted to share with everyone. With more Bloomberg Economics geoeconomics analysts focusing on the Middle East, Dina Esfandiary with us from Geneva, Switzerland. Dina is the author of New Order in the Gulf, The Rise of the UAE, and co-author of Triple Axes, Iran's Relations with Russia and China. She holds a PhD in the War Studies Department at King's College in London. As we mentioned, the U.S. conducting a 9th straight day of airstrikes on Iran. Why, Dina, should we be focusing on the longer array of actions and conflict to tell the story of a changing Middle East?
Because this is a region that has been filled with turmoil for as long as I can remember, and beyond that. And the last 2-3 years have only worsened the instability that the Middle East has seen. As we outline in the piece, after October 7th and the war that Israel led against Gaza, everything began to change. Alliances were reshaped in the Middle East, partnerships changed, new wars erupted, new violence erupted, and unfortunately, none of that looks like it's going to be resolved anytime soon.
Why? Is it just because it's been in conflict, this region, for so long? Does the U.S. attack have some role? Like, why are we here at this moment in time, Dina?
An understandable question. And honestly, I could probably write another PhD on the answer, but in order to shorten it, I think various factors. I think foreign players, including the United States and others like Russia and China, have played a role in it. I think players within the Middle East have done very little to improve their situation. I think within countries in the Middle East, governance has been a real issue, which at times exacerbates both domestic crises and regional crises. Honestly, I could go on. Economic issues, the fact that many of these countries are exporters of oil, that they're rent-dependent countries. None of these factors have helped. And the tensions that have erupted in the last few years, really, they've exacerbated these problems. And again, there is no path right now to resolving any of them.
So it raises the question about the U.S. role in the Middle East right now and what exactly the end game is for the United States. And, you know, far be it for me to ask you to get inside the president's head and give us a prediction there. But I think a lot of people question the idea of a clean and quick end to at least the U.S. involvement with Iran. Is that fair to say?
Absolutely. US war goals have been changing since the war with Iran erupted. Initially, it was about regime change. Then it turned into degrading the Islamic Republic's capabilities. Now it's become opening a strait that was open before the war broke out. So it's really unclear what President Trump's objectives in this conflict are. But I think for now, those objectives have become very limited, and they are primarily focused on the straits. It needs to be open. It needs to not be under Iranian control, and that is exactly what the Iranians are contesting.
Wait, that was how things were before the end of February.
That's right. But they signed an MOU, a ceasefire of sorts, where they promised to continue negotiations to resolve some of the issues that plague their relations, including Iran's nuclear program. But they didn't even get that far because within a few weeks, both sides had a different interpretation of the implementation of the MOU. The Iranians thought that the US was acting in bad faith by not implementing it properly, by, for example, opening up an alternative route in the Strait of Hormuz close to the Omani shore. And the Iranians felt that this was going against the MOU. And so they went forward with ensuring that they would be able to establish a clear red line. And that red line was that the Strait of Hormuz belongs to Iran and Iran must control it.
Dina, speaking of lines, you guys write in this story, Israel has become another fault line, and the relationship between the Gulf states shifted from neutrality to hostile, according to Bloomberg Economics. I mean, you talk about alliances with Israel and others not. Where is Israel in all of this, and how much are they, their role in kind of creating kind of where we are today?
Well, I would argue 3 years into a regional war, almost 3 years into a regional war, Israel is much worse off than it was at the outset. Before October 7th, there was a wave of Arab normalizations occurring with Israel. The UAE and Bahrain had already normalized, and there was real talk of Saudi Arabia, the crown jewels of normalization, also establishing ties with Israel. Now, a few years later, that is absolutely off the table. Saudi Arabia, even if it wanted to, even if the crown prince wanted to go ahead with normalization with Israel, he wouldn't be able to do it simply because domestically it is so taboo right now. And that really speaks to how the region views Israel. The populations, Arab populations in the Middle East view Israel, but also some of the leadership of the Gulf Arab states who now see Israel as a threat equal to, if not superior to, Iran, because it is enabled by the United States in a way that Iran just simply isn't.
So what fixes this? Diplomacy, war to the bitter end, or nothing? I did, in a silly mood or just, I don't know, thinking about, oh my gosh, reading the headlines this morning, a poll on X, and I'm like, does it just kind of keep going on for a little bit longer? Does the war end soon, or is it the forever war? Like, I don't know.
Honestly, I think right now we are on track towards this becoming the beginning of another forever war. Both sides are being very stubborn in terms of ensuring the respect of their red lines, in terms of shaping the negotiations. So they don't want to return to the negotiating table until those red lines have been established and the other side understands them. And neither side seems to want to de-escalate. And of course, the only way to end this really is through diplomacy. More war will not resolve anything. It may destroy infrastructure, it may destroy capabilities, but at the end of the day, it will only give more bitterness, more anger amongst the leadership of the countries that are facing this kind of war, and ensure that they rebuild and this all restarts again.
And not scientific. I'm looking at my X poll. It was one day, but I respect everybody who responded. It was U.S. and Iran over soon, 13%. Continues to take longer, 42%. Forever war, 45%.
Wow.
So, Dina, they agree with you.
Dina, what happened to the Iranians who, in February, the president thought would rise up and would sort of lead a new government, or at least show that there was some sort of resistance movement that would help to make a transition toward a country that at least this United States government wants to see?
Well, They've been distracted. They've been distracted by facing incoming bombs and missiles for the better part of the last 2-3 months. That will ensure that the Iranian population doesn't focus on the shortcomings of their government, but rather on the fact that they are facing war and they are facing a dire economic situation and unemployment and hopelessness. So their attention has been refocused on something else. The other thing that's happened, and this is pretty normal for a wartime situation, is that war has allowed the Islamic Republic's leadership to regain control of the streets. Under the guise of war, they have reestablished checkpoints throughout the country. They have reestablished some control, ensuring that people no longer come out and demonstrate. So expressions of discontent have really been quelled, which means that essentially what this war did was buy the government time.
I'm looking forward to your next PhD paper because I am curious to see where this all goes. It's just pretty amazing. And just even also to see shifting U.S. sentiment when it comes to something like Israel. There's a lot of great statistics and research in this piece. Dina, we knew we wanted to talk to you, so thank you so much. We know it's later over there in Geneva, but thank you so much. Always, always appreciate your time. That, of course, is Dina Esfandiary. She is geoeconomics analyst. She focuses specifically on the Middle East. So highly recommend to you check out this story by our team. It was a Bloomberg Big Take, and it is on the Bloomberg and at Bloomberg.com. She, of course, is with the Bloomberg Economics team, joining us from Geneva.
Hey, coming up next, Wall Street alchemists are tapping insurers to unfreeze private markets. Have we seen something like this before?
Familiar.
Does it?
Yeah, feels it.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg S&P. Little change. Semiconductor stocks are rallying. Oil is higher, but we got to begin with the big business story today. That involves Paramount Skydance and Warner Brothers Discovery. Federal judge in Oakland has temporarily paused Paramount's $110 billion takeover of Warner Brothers Discovery. The judge ordered the companies to hold off on consummating the deal for 14 days. Paramount and Warner Brothers had hoped to close this deal as soon as July 22nd. You recall that California and 11 other states sued to block the Hollywood mega merger on July 13th. Shares of both companies are trading lower. Paramount Skydance down now by 0.3%. Warner Brothers Discovery lower now by 3%. Stocks have halted back-to-back losses as chip makers bounce. Right now, the S&P barely up by 0.5 point. The Dow in the red by 278 points, down 0.5%. S&P just turning lower by 1 point now. NASDAQ holding on to a gain of 64 points, up by about 0.3%. Semis are advancing, well off session highs, but the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 1.3%. We've got the 10-year yielding 4.59% with a 2-year 4.21%. Gold down $11 the ounce, down 0.3%. And West Texas Intermediate crude, it's been bouncing around, but WTI up by 1.2%. 83.49 a barrel. Brent 89.44, up by 1.5%. Deal news: Tempus AI, it's a technology company developing AI for the healthcare industry, has agreed to buy Personalis. That's a fellow biotech company focused on cancer testing. Shares of both companies are lower. Right now we got Tempus down by 7%. Personalis trading lower by 13.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Hey, a story that caught our attention this morning about a product that bundles stakes in private credit funds into a bond with a target grade of A2 from Moody's, backed by a rare kind of insurance.
Is it like a nesting doll?
It's exactly. Bink, 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 but not every nesting doll maybe should get an A2 rating.
Okay, it's a rapidly evolving realm of fund finance where creative bankers and advisors devise ways to unlock cash tied up in private assets. It often creates investment-grade debt that can be sold to insurers and pension systems.
Yeah, it has an oddly familiar feel to it, but we're not saying everything oranges, maybe it's not oranges to oranges, but it does have us wondering what could possibly possibly go wrong here, Tim?
Well, to talk more about their reporting, and it's a Bloomberg exclusive. The story, today's Bloomberg Big Take. Scott Carpenter is here with us. He's a Bloomberg News credit reporter. He's here in the studio. Also in the Bloomberg LA bureau, Davide Scigliuzzo. He's Bloomberg News chief correspondent for Private Capital. Big welcome to both of you. Scott, you're here with us, so I'm going to give you the first one. What is going on here? Walk us through it.
Sure. So private credit funds and private equity funds need cash. They've been slow to sell investments. That's a story we're all probably familiar with. This is one of the innovative ways that they're doing it. It's a universe called fund finance. They take shares of these funds, they put them into special vehicles, they issue bonds. So you're turning equity, the shares of the funds, into debt. In doing that, you enable a lot of investment into the fund, and that's exactly what they want. They need a new source of dollars.
Sounds perfect.
He said innovative.
Davide, come on in on this. Tell us about a specific deal that kicks off this story that UBS is up to.
Yeah, we've reported about a deal that UBS has proposed, similar one that Partners Group has executed already, where on top of everything that Scott just described, we have an insurance policy written by Nationwide that ensures the majority of that transaction against losses. And what that does is it boosts the rating all the way up to A2. You know, these deals typically either are not rated, or if they're rated, they would get a mix of like triple B, single B ratings. So the insurance policy is what really turbocharges this transaction and gives it a much higher rating, allowing other insurance companies on the other hand to buy it more easily.
All right, so grade A2 from Moody's, the bundling, all of it. And yet you guys write in the story, quote, yet potential buyers needed only a few moments to flip through the presentation and realize, Davide, it was no routine deal. What did they see?
Yeah, I think the insurance wrapping, as this structure is called, is still quite rare in the world of fund finance. So you see a lot of transactions where there is the slicing and dicing in different tranches. Very few where a majority of the transaction gets a single A rating, like in this case.
Okay. Yeah, go ahead.
What could possibly go wrong, Scott? No, help me out here. I'm being silly and funny because we've all lived through the great financial crisis, and we just want to be smart here. We already, when we talk private credit, a lack of transparency. Now, those who issue private credit said, listen, you know, there are good private credit issuers, and there are those who don't, and there are those who really are only going to get involved in really smart deals. So I don't know. There's so much money sloshing around that says to me there's going to be a lot of deals that don't deserve that top rating, that rating of A2.
Sure. Yeah, a couple of things. For one thing, it's important to point out this deal was only a proposal, and so we don't know if it sort of reached conclusion, and actually Moody's and Nationwide say they did not have anything to do with this. So this was a proposal.
Okay.
What it shows you is there's an appetite for it. And they're doing different things. The other thing is, the purpose of this is to bring in insurance investors. There is a ton of insurance money out there right now. A lot of people are retiring, and they're buying annuities. That cash needs to be invested in something that's investment grade. This allows you to turn something into debt and then get it investment grade. That's the goal. Are there parallels to pre-crisis? This is a big question. It comes up a lot in structured finance, which is an area that I write about. And I would say it's worth paying attention to. And there are people that look at this and, you know, have some concerns, but there's a lot less of it going on than before, specifically the insurance stuff. Yeah, go on, sir.
Well, I was going to say, you say it's worth paying attention to. I'm getting a comment from somebody listening or watching right now. He says, this sounds wild to me only in a bull market, he argues. Is he right that it's wild?
It definitely shows you something that people are innovating. They really, really want to connect these two universes. On the one hand, you've got the funds that need cash. On the other hand, you've got the insurance companies that have cash. You need to connect them, and that's the financial engineering that's happening.
Okay, so Davide, come on back. Is this about investors chasing a good investment, or about an investment chasing investors because private credit issuers need to put money to work?
I guess you could argue it's a little bit of both. You can make a case that financial markets are there to distribute kind of risk and returns to investors who are willing to take it. So the point of structured finance and securitization is to do that and allocate risk. I think one issue that people have highlighted here is that if there is a proliferation of these deals and all of a sudden Nationwide is taking a lot of exposure in this type of transactions, they're actually creating a connection between two parts of the financial system that wasn't there before. So if something were to happen to Nationwide and their credit rating that has nothing to do with private credit or private markets, and they get downgraded, all of a sudden, all of the issuances that they have wrapped would get downgraded as well.
Carol, you always remind us about the rating agencies' role in this stuff.
Is there the same?
You always bring that up.
Is there the same conflict of interest potentially?
The conflict of interest with you want to get business, you know you have an incentive to.
That's a yes.
Well, I mean it's there. I mean the ratings agencies of course have different divisions, and so in theory they're insulated from that. But I suppose it's an open question.
What do you think? We just got to wrap up in just got about 30, 40 seconds, Scott. You know, in doing this story, you and the team, what do you think our audience who listens to us talk about private credit day in and day out, what should they be kind of watching out for or take away from this, just quickly?
Whether we see the innovations continue to push into these new directions. I mean, this is not completely out of the blue, like we had seen these before. We're seeing more of it. We're seeing more of an appetite. So if we see continued more of the risk-taking in this area, in fund finance, that's something to pay attention to, for sure.
Davide, 10 seconds. Is UBS going to do this deal? Have you heard anything from them?
We've been told the deal is still in progress, and we'll have to see over the next few weeks and months. These are transactions that typically take a very long time to put together, so it's not surprising that it hasn't quite crossed the finish line yet.
Davide Scigliuzzo, Bloomberg News Chief Correspondent, Private Capital, and of course Scott Carpenter, Bloomberg News Credit Reporter. Check out this story. It is on the Bloomberg and at Bloomberg.com.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Businessweek Daily. That's Carol Massar. I'm Tim Stenivek. It's Monday, July 20th, 2026. We got a big week of earnings coming up, Carol. There was a big week last week, too.
Alphabet, Tesla.
Yeah, the list goes on.
I think I heard Tom Keene cite some statistic in terms of how many companies are reporting this week. Jess, how many companies? 86
this is why.
And 20% of the market cap.
This is why we have Jess Metten here.
Next week's the biggest week. Next week's a third of the companies.
Okay, so that's the killer week.
Yes. So
this is sort of a killer week.
But still, 2 week stretch though.
Yeah.
Most important 2 week stretch for earnings season. There we go.
Okay.
Yeah.
So Tom Keene wasn't wrong.
No, he was. I don't know.
I'll let you talk to him about that. The S&P right now is flat, but lower. The Nasdaq Composite down about 0.2%. The Dow down about 0.6%.
I'm Carol Massar along with Tim Stenivek. Let's get to some stocks on the move. And with us, of course, is Jess Metten. She is Bloomberg News Senior Equities Reporter. She's here in studio. All right, let's start with a name that I have to say, I don't feel like we talked about much. I'm hungry. A name that we didn't talk about much, but when it was named to go into the NASDAQ 100, all of a sudden it caught our attention.
Yes. So this is an optical equipment maker. And of course, anytime we see chip semiconductor stocks rallying or declining, it's part of that group. So this is the top of the leaderboard in the NASDAQ 100. And it's actually down over 25% from its May high, but LITE is the ticker on this. It's up about 6% today, so on pace for its best day since July 14th. But actually, Barclays ended up upgrading the stock to overweight from equal weight. So they're talking about how the underlying fundamentals from the transceiver laser demand, they still think that's optimistic. So the price target's actually $1,000. So if that would imply close to a 40% increase from where the stock closed on Friday. But in general, if you think more broadly what's been happening today, the stocks, of course, entered a bear market on Friday. You're seeing a lot of those chip makers rebound today. So not just Lumentum that's higher right now, but SanDisk, Marvell, Micron, Western Digital. Of course, Intel has earnings on Thursday.
I'm so glad for SanDisk. It's had such a tough year.
And what's interesting about this too is,
It's-
that was the best
She's being
performer in the first half
sarcastic.
of this year.
It's been on a tear.
I'm glad you brought it up.
But you're
because
right.
If you use the comp function, if you look at where the stocks peaked in June, SanDisk is down more than 30% in that span. Micron's down more than 20%, but Nvidia only down about 2-3% in that span over the last month or so.
But also didn't go up as much.
No,
right?
and it's only, I mean, if you think about year to date, that performance, of course, to your point, SanDisk, Micron, the two best performers in the NASDAQ 100 the first half of the year.
Okay. How much is it up? No cheating.
This
Jess
year, I'm
probably
going to
knows.
say 300%.
Oh, way above that.
495%.
Yeah. And if you looked from June of last year to the
Yeah.
end of this June, it was like 4,000%. It was crazy. So
Okay.
wild there.
From one tech name to another tech
Yes.
name, and another one in the NASDAQ 100. Talk to us about Apple.
So Apple, AAPL is the ticker on this, down just only 2%, so worst day since not that long ago, June 25th. But that's also the same day Mark Gurman had that story and that he reported on the price increases for the Macs, other home devices. But in that span, the stock had been up more than 20%. But of course, on Friday, that's when it briefly overtook NVIDIA for the world's most valuable company. So today, there's not a ton of reasons why. You see a little bit of running though, but also it's only 2% off of that all-time high that it hit just last week.
Yeah.
So you're seeing a little bit of a trade. So that's why I was looking at the point decliners specifically for the S&P. So that's why you're seeing the index more broadly flat right now, because if you look at on a point basis, it's a market cap weighted index. It's Apple and Tesla, biggest point decliners, and then you have Microsoft up there, one of the best point decliners, or point gainers rather, today.
Okay. Did you go to the movies this weekend?
So I did not, but I didn't have time. However, I did pass by the AMC near Lincoln Center last weekend. So I saw everything for when the premiere was about to go on for the Odyssey. So AMC is the ticker on this. If you look at this stock, first AMC Entertainment up 25%. So that would be its best day since May 14th, 2024. It's also in the Russell 2000, so it's one of the top gainers there too. So it's up more than 55% year to date, clearly outpacing the Russell 2000's 19% gain year to date.
A 40-foot Trojan horse statue.
I saw that.
Was
I got to see that
erected in
last
front
week.
of the Upper West Side movie theater.
Don't they know how that sort of story ends?
They had everything blocked off too for streets
Did
there.
they get security to look at that?
But also the Odyssey, it ended up performing very well. So if you look at the U.S. and in Canada this weekend, $125 million in ticket sales. So the number one film, obviously, over the weekend. So the CEO of AMC talking about this is some of the strongest growth they've seen, obviously, since post-pandemic. So we'll see if that can continue. But you also have Spider-Man coming up, a lot of other big blockbusters potentially this summer.
A lot of big celebrities.
Yeah.
And it's also Chris Nolan, right? Directing
Yes.
it.
So big name. And also, I
director.
wanted to point out other peers like Cinemark, and I can't leave out IMAX because this movie was the first one to be completely filmed on IMAX cameras. So IMAX is the ticker symbol for IMAX, but also that stock performing very well today as well.
IMAX actually down a little bit.
So it actually gave up then some of the earlier gains
Was
that
up
it
about
had.
4.6%.
Yeah,
And
so
then
it kind of reversed that.
Yeah. But you gonna go see it?
Yeah, I'll see it when it hits the streaming service in a few months.
You want to see it in IMAX?
I would love to, but
Jess?
doesn't really happen.
You gonna go see it?
I think I'm going to go see it.
Yeah,
Why
go
not?
see it.
Why
Tell
not?
us
When
what
I
it's
have
like.
time.
Yes.
Maybe next weekend.
little class trip.
Yeah, we should all go together, guys.
Not available between 2 and 5. But other times work.
Good to know. Just met, and thank you so much. Check out our Stock Movers podcast, 5-minute episodes, big winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
Coming up next on Bloomberg Businessweek Daily, if you are sticking with us, the Bears are out in full force. We talked to one of them right on the other side. That's next.